Hello, this is Cryptolyze. I hope you are well this Tuesday, 26 September 2023. We have a lot of news to review, so we won't waste time. We'll start the daily news straight away. We start with Huobi Global, which is HTX Crypto, which had a hack of $79 million. So something which is relatively substantial, but which could have been much worse. This is exactly what Justin Sun, who is the main shareholder of Huobi, tells us, in which there were 5,000 ETH that were stolen, the equivalent of $8 million. He covered the loss himself, specifying that in all cases, the user's cryptos were safe, whatever happened with always. This term safe, or which was invented by CZ precisely on the principle of remaining safe in terms of liquidity and in terms of user funds for centralized exchanges. We continue with Mixin Network, which had a big hack, $200 million which were hacked, namely that it is half of the users. There remains only precisely half of the users who are currently at the disposal of a very large hack. We're talking about the biggest one this year, and to remind you, we really had 600 million with Wormhole last year. Here we are talking about 200 million, something which is certainly 3 times less than Wormhole, but which still remains very, very important, and which highlights the importance of security at the level of decentralized finance and the risks that are incurred. And the question I will ask you now, are the rewards provided by decentralized finance platforms sufficient to cover the risks, which are increasingly greater, and the rewards, which are increasingly smaller? So currently, it is very complicated to have good returns on platforms which are approximately legitimate. We are forced to go to riskier platforms. And when we see the possibility of hacking on platforms that are still Mixin, it's not a small platform. It's really something that is quite important. So here we are in something where I think we have to take a step back, wait for the centralized financing to change, and for us to have a return from the bull run to really have a risk payment being made. Currently, it is not the case. So we take a step back. We have our friend Lagarde, who made her speech yesterday. We can clearly see the speech at 15. Clearly, we are hitting the iron that is burning in the forge by explaining that the rates will remain restrictive. So she's not talking about an increase. As a reminder, they ruled that, finally, Christine, during the last increase, ruled that there was no increase in rates. Personally, I tend to tell you that I think we will have one more increase, 2 increases. On the ECB, which is rather logical given that we are still behind the Fed, it would be illogical to remain as is, even if we have an equity crisis at the level of the debt of the various European countries. That doesn't mean we can't stay at this level again. So she says that she will stay at this level and that it will stay there for as long as it takes before there is a reduction in rates. So we also took the opportunity to talk about the digital euro. She talks about the pilot, which will still have to take at least 2 years before the governors make a final decision. So we are still very, very far from the digital euro. I think that 3 minus 4 years, we will see something that begins to appear. So I think that for the next cycle, we will not see a digital euro, and potentially at the end of the next cycle, we will see one. So what are we waiting for today? Today we have housing sales, August 9, 16, very important. 16, also the Confiance Board, very, very important. So for me, those are really the 2 crucial points to follow. So building permits, yes, but I think we will be roughly in the forecast. We will not move quite a bit, 14. So before the opening, I think we will have quite little momentum compared to that. On the other hand, what follows, if we ever shift to the other 2, yes, we will have a gap which will be relatively strong. Speaking of discrepancies, I just wanted to come back to a piece of news that I haven't covered because there are lots of things to cover, and which is JP Morgan speaking out on Ethereum with mainly a year of liabilities on the stake, Shanghai update, and the merge update, okay? So 1 year compared to the merge, and 6 months, 7 months compared to Shanghai. What is interesting to see is that they therefore consider that it is weak, that there is actually no interest in relation to Ethereum despite this, which happened in Shanghai, and giving us the structural volumes which are present. So what is interesting to see is that we have a communication of analyses which are ultra specialized all the same. Basically, JP Morgan being one of the analysis firms. Finally, in the bank, there is one of the analysis firms, which is currently one of the most highly rated, which gives us a hinopsy like that, knowing that the volumes which are given, it is logical. They are the volumes of bear market. Do I personally take this as the fact that Ethereum is not interesting compared to Shanghai? No. I take a step back. I say to myself, okay, what they are trying to tell us is not to buy Ethereum. The principle being the following: we are here in September. We are in a process where the halving is in 250 days, I believe, if I am not talking nonsense, 210, 250. I have a big doubt. But we are in a halving which is getting closer. We are in a next site which is getting closer. So obviously we are in the process of pushing the price downward because we know that we have a macro which is relatively strong. We know that we are going to have an Ethereum which is going to sink. It is not to buy in these zones to be able to strengthen positions, namely that it speaks of the next update which will take place, which is very important, in which we will have the sharding which will arrive. We will have the account abstraction. They talk about it as being elements which should arrive in the distance and which could solve the problem. I think that there we will have to follow the news and in particular the communication from JP Morgan on Ethereum. But again, this type of communication is very strange, especially in a time like this. So at the macro level, very interesting. We did a little dip yesterday. We went to recover all the liquidity in these areas, and then we went back up to retest. We see that we start today the same with a bearish dip. So 70% chance of reversing the trend. We still have this row test, which is pending, in which we have a large part of imbalance, which is in weight here. We would increase this lot. We could even go a little higher. We could go get 4,461. Here I would potentially have position reinforcement to do to accompany the movement that I am still waiting for. To retrace precisely this gap and retrace the objective 1 and 1.1 to 4,200, and I keep in mind the objective 1, 618 to 4,100, which corresponds to this entire work area. I already talked to you about it relatively regularly. On USoil, that's it. I made the decision to cut a large part of my position last night very late to cut and lock in a large part of the profit. I left perhaps 10%. I think that it is 9% of my position if we ever push to be able to have a little bit. Margin to strengthen if we ever retrace strongly to be able to start again, but that does not prevent me from thinking that we should go and retrace either in these areas or here 0.5 or even why not 618. If we enter 618 there, I would potentially have a pullback to do here if ever I have that. I will return. I will strengthen the position already. So the 9%, which will always be present, I will strengthen them to smooth my PMA, my average price D purchase to accompany the price upwards. So here what I am waiting for and other possibilities, I was mainly waiting to have a communication at the level of OPEC or Saudi Arabia, which would have pushed upwards or maintained. So here I will wait for the retracement, see the positioning that we are going to have on their side. I think that we will necessarily have news in this area, okay? 0.5, 618, we will have news. So in terms of oil, 83 until we're going to say 85, I think we will have news that will come, which will catalyze the movement of oil. So I'm really in this process. We're taking a step back and we're locking in the profits. What is interesting to see is that we have the VIX, which is really in the process of retracing strongly, in which we have had a big acceleration in the process of retesting. We are in the 17. So we are clearly expecting the volatility. We will see the movement of options, whether or not we will have an upward acceleration or not. And at the level of BTC, we see that we are still in our retest zone. We are just going to do work, which will be very important because we are here on a daily basis, which is relatively bearish. We have this flow for some time, and which is a bearish breakout. We see that we have not recovered the low for the moment. We are just in a form of retest, which would be rather logical with a form of ranging here 30,000 minus 25,000, which is pretty normal that we've had in mind for quite a long time, or even higher. For me, the idea was to do 25,000 minus 35,000. Well, a priori, we have difficulty passing 32,000. So we will stay with 30,000 minus 25,000. And we have a bearish flow, yes, which is stopping clearly at the bottom of the range, which is at the same time here, the zone of accumulation, break of accumulation, week off. We've been talking about it for some time now. For me, what will be really important is to determine whether we are in a bearish flow, which is the bias that I currently have, or are we simply in a zone of ranging with the 25,000 as the lowest range? That is to say that we have a macro, which is relatively complicated. We know that we are going to have an SPF 500, which is going to sink. We keep that in mind, but we move it away completely immediately to say, okay, we only stay on TA, only on technique to see what is happening. Well, for me, we are, yes, in a form of range. And as long as we do not break the lowest here, as long as we do not break the 25,000, that implies that we remain in a form of range. And we could even say that we are in a range within a range. It's a little bit the representation that we had last time. The explanation that I gave you in the last analysis, I told you that we were in a range within a range, and we were in a form of reintegration here. And there we are going to do, as usual, a little exercise, because when we are still in two biases which are present, and we must confirm the bias that we have, we remove everything. We already look at the graph. We see here, do we have a structural flow clearly without indication? We see again our resistance, which is here. We see again our resistance here. Good. a priori the range is still very present. And this, which I like to do, once again, it's the same. We reverse. Here, do we tend to say that we are rather bearish or are we rather bullish? Do we tend to say to ourselves that we are going to break this zone to start moving upwards? Shouldn't we say to ourselves that we're going to retest this part first here, 28,600 before leaving again? Something that would be done in this style. We retest and then we leave. There, it would be more in this dynamic. We are more in this representation here. In any case, technically, I say to myself that here I have the demand zone. So I have here the market imbalance, which is present, in which I have a very large support, which is present here, in which I will certainly rely on to start again, and in fact continue the structured movement, which is here, where we can clearly see that we have a weakening of the effective bearish momentum. And also because suddenly we are quite simply in a chart which is reversed. And so for me, we are in this dynamic, and what we will have to do will simply be to do the same thing again, but this time on short term. Still short term, in which we have the top of the range and we have a small range which has been present for a certain time. We see that we tend to consolidate small ranges. We see that we have here the small retest that we had planned yesterday. Perfect, exact, in which we did the first, second retest to see if we can break and reintegrate. Do we re-enter this zone here? So implying the top of the range, which is present, in which we would go and retest here the 26,800 with, I think, certainly an extension to get the 26,000, almost the 27,000, which would be more or less logical for me to liquidate a game. Liquidity, which is there, which has been left waiting. So there we would have this dynamic there, the same hop, we withdraw. What do we see? We still see a big lateralization. We have a flow which is relatively bearish, in which we have a big imbalance here. So we still have a bearish intention. But we see that here we do have a retest momentum, which is in progress, being carried out. Has the retest momentum passed? I want to tell you no, because we have not had a strong downward movement, a continuity of the main flow with the retest. So that implies that we will certainly seek higher liquidity. And in any case, the probability of going down now decreases drastically, given that we did not have a strong movement as soon as we hit the retest part in which we had liquidity. So there we have this process of reflection. Same hop, we reverse. What do we see? We see that we are more in a consolidation process here. We are in the process of retesting a part there, and therefore that tells us that yes, we can go and retest this part here to recover this liquidity. Clearly here it is not a lot which is protected. We see it clearly there once we reverse the charts, and then we can go and retest the 26,900, therefore 27,000, which is the idea we had with the previous object. So we still have a form of confluence which is taking place on our side. So we take a step back. We say to ourselves that we can look higher. Target here, 26,800. We will say with extension 27,000 for continuity. Well, clearly the order flow, I pass it because there is absolutely nothing. What is interesting to see is that we have a gap between Kingfisher and the liquidation map in which we have structural liquidity, which is found here between 26,800 and 27,000, which confirm our bias, while behind us we have the liquidation map, which is reversed, in which we have very little liquidity. So a very little bit of liquidity, a little bit before the 27,000, but we liquidated much less than what we can see here on Kingfisher, namely that here is an estimate of the effective liquidation clusters at the BTC level, and here it is the recovery of liquidity, therefore stop losses which are present and TP which are present on the different exchanges. It is really the difference between the two that exists, and when we have a gap between the two, what will interest me is to see what will be the reaction of the price. That means that it is quite rare to have gaps between both it happens, and generally it's Kingfisher who takes the upper hand compared to the liquidation map. Is this going to be the case? Again, I'm in the process of creating a model of evaluation between the differentials of the two to try to create, I was going to say a law, but rather a form of rule between the two in order to be able to rule. In any case, clearly we are going to have movement today or even tomorrow, and there we will have to prepare, because I think that we will perhaps liquidate a part afterwards. We will have to prepare. That does not prevent us from still being stuck in this range with very little volatility. It's just that we are so used to having absolutely no volatility that as soon as we do 5 minus 6% or even 3%, we are really very happy with the level of BTC, something which must have been the forms of lateralization during the previous bull market or even during the bear market. We were in this dynamic with volatility. Now, this is no longer the case at all. So we look for, as soon as there is a little bit of volatility, we just have to always be very careful. Don't overtrade. We will stop here for the video. I hope you liked it. If so, don't forget to leave me a like and a comment. It always makes me very happy. And I have an announcement to make. We are going to do a live Sunday 18 Onir October. So Sunday Onir October 18, we'll meet live on YouTube. I'm going to make the announcement to you quite regularly because it's been a long time since I've done a live. Many of you have asked me, so we're going to do a live Sunday 18. Note it. And we meet at 13:30 for a video on LDO, the Lido crypto, big Ethereum protocol on stacking. We talk about it at 13:30.